So in this video, I am going to be going through and looking at a couple of charts with y'all. I'm going to look at the S&P 500 and look at some holdings in the S&P 500, talk a little bit about how to begin doing some research on other stocks. Also, I'll be talking about something that I saw as I was just kind of scrolling through. I saw a specific stock just go crazy, and it just kind of helped me to see sort of the potential that we're dealing with. So, um, as I go through my process, I've had some time to reflect, and I'm realizing I've been trading, I've been working, all kinds of things, but I really haven't been good at investing. And I'm really, really realizing just how important it is. And I, want to build something for, family, be able to help other people in this area, because I'm kind of, I don't know, right? Like, kind of, I feel I don't really like seeing people suffer through, y'all already know, health, and then with wealth, which is another piece that people suffer with. And also uh, there's another piece, relationships. I don't think I'll be touching relationships so much. But right now, really, my focus is, I've been so good about the health and the health journey, and I touch health like almost every day. I think it's really important to really start focusing in this other area of life. So, as time goes, I keep hearing more and more that in the next 5 to 10 years, the wealth gap is going to continue to get bigger. We're already seeing what it's looking like in terms of groceries in general, right? And I just think that this is going to be something that's really important in the future, just to start making sure that investments are in place. So I'm going to share what I know. It's really just going to be related to the stock market. Y'all real estate people, I'm coming for y'all, because I really want to learn some more in that space as well. So let's get it.
Right, so let's look at SPY. Um, SPY is the ETF for the S&P 500. We'll take a look at the holdings for SPY in a little bit. But let's look at this chart just to start, right? So overall, we see that the market continues to go up, right? Point number one, really, this is really what I want to talk about. No matter what, the market continues to go up. So this chart is a 12-month chart. What that means is that each one of these bars, which are called candles or candlesticks, are 1 year. So they're 12 months each. So this is 12 months or a year. This red one right here is 12 months. This red one right here is 12 months. And this green one right here is 12 months. So every single one of these bars is a year. Cool. So year by year, we see that the stock market continues to go up. So this one is starting in 1993. The S&P 500 was trading at $42 at the beginning of 93. And then now in 2025, the high was 614, 613. The high was like 613, right? Somewhere around there. Now, I just want to highlight a couple of things just to kind of put things into perspective. So let's talk about a couple of years that we remember. 2008, there was the crash of 2008. All things were going on and everyone was super, super scared. But look at this bar, right? Like, yes, it's decent, it's big, it's pretty significant. However, look at this in comparison to the overall market. So the high that year was 147. We came down to 76. And so after that, right, we came down a little bit more, 67, but then we came back up. So in I believe 2013, so 2012, we're kind of about where we started in 2008, and then 2013 we begin to surpass. This is why a lot of people say, if you're going to invest, make sure that you are thinking about holding for 5 years or more, because that's really when you'll begin to see progress in your investments, right? Depending on when you get into the market, but still, right? 5 years or longer, good. So hold your positions. Like, don't be scared. Get into the market. Hold your positions. 5 years is going to go by, whether you're in the market or not. And that is a lesson that I'm also learning as well, right? So all right, so that's 2008. Next time we see some scary stuff happening is 2020. Yes, we go down at first, but it ends up turning out to be a bull market and things go up. So people were scared. This was COVID. And people were getting scared. I remember I got into the stock market in 2021, end of 2021. That's when my daughter was born, and really begin trading. And so I learned about investing in 2021, really didn't do too much with it because I heard about trading and options, and that you could make money in the market every single day, trading options. So I'm like, let me get into this options game. So 2020, I'm in, right? And this is really where I learned how to trade. I learned how to trade in a bull market, and I mean a bear market, excuse me. I learned how to trade in a bear market, and really love it. And I'm like, oh, this is good. Because when things are going down during the day, especially, they go down really fast. And so if you're in a trade and you got the direction right, you can be profitable really fast as well. So and then going up, they say staircase up, and escalator down, or elevator down. So this is where I learned how to trade. This is also what helped me not to be scared of things going down, because I realized I had a skill that would help me to make money as the market went down as well. But anyway, nonetheless, let's take a look at this. 2022, we're going down. We start off, the high is 475, and we come down to 348, right? But overall, again, yes, this is a big candle. Overall, this is actually really good, because I'm realizing we got some demand going on over here as well. So we realize that the market, we're realizing that the market continues to go up. So 2022, it doesn't take long. We get back to where we were in 2023, and then 2024, bam, right? So from 474 all the way up to 609 in 2024, and now here we are in 2025, retracing who knows to where. However, based on history, we know that what's going to happen. We are going to go down, retrace some. However, what's going to happen overall, we are going to keep going up. So scale into your positions, buy a little bit as the market goes down, so that whenever we turn back around and go back up, you are positioned well, and hold your positions, right? Think about holding your positions for 5 years or longer, and just watch and see what happens, right? Like, you have to start somewhere. Those, what you're going to buy gym shoes with, what you're going to get your hair done with, put it into the stock market, and you'd be surprised as to what will happen over time. So the other chart that I wanted to look at is Coke. Let's look at Coke. Coca-Cola blew me away, because this wasn't even that long ago. So I remember reading about Warren Buffett, like, investing in Coke, and I'm like, man, why is this guy investing in Coke so much, right? And but let's just take a look at this. Okay, so this, I'm even going to start in 2014 just to bring us even closer. 2014, Coke was at about $69 at the low, and then 91 at the high, kept going. We have some retracements and all that kind of stuff. Let's bring us even closer, right? So now 2020, 2021, this is around the time that I'm in the market. And this is really when I'm really hearing more and more about even Warren investing more into Coke. So at the low, we were at 264 for Coke. And man, I could have gotten into this, right? Like could have invested into Coca-Cola. And look at what happens. Okay. So again, right, we're talking about most recently, 2021, everything, this was trading at about 260, 261, actually a little bit lower, about 251 at the low. And then now this is 2025, Coke's high is 1,459. We are currently at 1,416. That's the price for, stock for Coke. So even if I would have gotten into Coke at $261, the stock price is now at 1,000. Like, look at that, right? 1,461. That's huge. That's massive, right? And so that's just going to take some research and looking to see fundamentals. That means that you're going to research a company and see how it's doing overall. I had a question about, like the S&P 500 ETF. Let's take a real quick look at this. And so the S&P 500 ETF has, the top 500 companies in the stock market. So essentially, so this right here, this is Yahoo Finance. I just Googled S&P 500 ETF holdings. And what I find is that, right, you see who has weight in this S&P 5, like who holds the most weight. So whenever I'm looking to see and look into different companies, ETFs, one, are a really good place to start because they essentially do the work for you. They see who's performing well, whose financial sheets are looking good, whose CEOs and CFOs are, performing well, and what their history is and all that kind of stuff. That's kind of how you do, that is how you do fundamental research. So if you are looking to see which companies are doing well, look at ETFs, and then come and then look at the different companies themselves to see how they are performing. But you really don't have to do too much, right? Like, these companies, there's Apple, Microsoft, NVIDIA, Amazon, Facebook, Berkshire Hathaway, Google, Broadcom, Google, and Tesla, right? So these are the top 10. Most tech, as you can see, very tech heavy. And then financial services, then healthcare. And these are different sectors of the market. So you can even look within the sectors to see which companies are performing well and just kind of do your research in that way. But you really want to see that a company's has, low debt, that they're, that they have good financials, that they're profitable. You want to look at their leadership and just kind of see how the company is going to take a little bit of time and a little bit of research. However, right, you can't go wrong um, in terms of the overall market investing into ETFs. Another one is the VOO, is the Vanguard ETFs, S&P 500 ETF that you can look into. There are several ETFs, and these are just this is just something that like holds a bunch of different stocks, and what it does is it rates them and also sees how they're performing and then gives them weight based on best performance. And so overall, you'll kind of see what the market is doing based on the overall ETF. QQQ is another one that I really like as well. So just wanted to kind of take a start here, and then another video I will break down some more research.